What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. On this channel, we happen to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But you can use our charting and trading method to trade any company that's publicly traded in the U.S. stock market. Make sure you hit that like button. Really appreciate those who have continued to tune in and hit that like button. And also, if you're not subscribed, make sure you hit that subscribe button and the notification button as well. That way you're notified when we release new videos. We release bonus content from time to time, aside from these nightly and weekend videos. So you definitely want to make sure you're notified of those. Speaking of the nightly and weekend videos, like today's video, we focus mostly on identifying triggers and targets from everything ranging from scalps and intraday trades all the way up to long-term swings or leap trades. So if you want a deeper dive into exactly how we set up our charts, the trading levels, the different color coding for the different time frames, things of that nature, check out the bonus content on our YouTube page. And for more information about this strat, which is the base of our trading method, you can find more free information in the description of this video. So I encourage you to watch this full video, because along with the triggers and targets, we do give some pretty good insight into the price action on all time frames. So with that, let's go ahead and get in today's agenda. First, we'll go ahead and recap the price action from Tuesday, October 11th. Then we'll zoom out like we always do and look at the week, month, quarter, and year. And then zoom back in to set our triggers and targets for the day, for Tuesday, October 12th. And we'll also just do a quick review of the triggers and targets for the week, month, quarter, and year as well. All right, so just looking at today's intraday price action, again, kind of flat. There was that push at the beginning of the day. We were able to identify the lower high at the opening print and get it to some puts for the gap close. But after the gap close, we kind of floundered, tried to push back up, never really got totally up to the top of what was the gap, and faded off into the end of the day. So just looking at the chart, the major levels in play here today, of course, overnight low, which was basically, or is, last week's 50% level. That's this purple dashed line. The opening print, that was the first traded price of the day. And the previous low day, which is 43.46, which, is at the top of the gap here. So you can see we obviously opened almost with a gap down, basically at yesterday's lows. And at the opening print, what's this, 10, 15, 20 minutes into the day, we got our lower high. Now, if you're not familiar with this channel, what we look for from a scalping perspective at the beginning of the day is we look for lower highs at or below opening print to get into puts, or we look for higher lows at or above opening print to get into calls, right? So today we see a prime example of a lower high at opening print. So the last high on the 5-minute, this is a one-day chart. Let's bring up the 5 minutes. There we go. Okay, Thinkorswim. All right, so if we look at the last high on Monday, November 10th, it was up here, right? So this first high that we got here, once we tick down with the 2 down to lock this in as a high, it is a lower high. So we entered puts because we're right at opening print. Can see we got a lower low, lower high, lower low, lower high, lower low for the gap close. Now, when we got this, we held our puts to see if we could get a lower high and continue to extend further, but we got an equal high. I think it was slightly higher. What's this? 41.65 and 40. Yeah, equal low. Once we had the equal low, we went ahead and put our stops right here. That way, if we did go 2 up, locking in this equal low, we could have had a bounce basically at the gap for after the gap closed. So we locked in our profits here. We did leave one runner that we ended up stopping out here. So slightly less profit on the runner, but the majority of our position, we got a majority of the move. We did enter some calls for December, just going off of price levels, right? So this doesn't have anything to do with the lower highs at or below opening print type of thing, but we recognize, all right, we got the gap close. This green dashed line is last month's 50% level. The again, like I said before, the purple dashed line is last week's 50% level. So those we're looking at as, with the gap close, looking at as support for a possible pushback to the upside. If we zoom out a little bit here, we can see let's get a little cleaner chart here. On the 4 hour, we're looking at a possible higher low here. So, we may push down a little bit further tomorrow. We are set up, with the 1 in the second 4 hour candle of Tuesday, November 11th. We could have a possible 1, 2 down, 2 up situation if we go 2 down in the first 4 hour candle of tomorrow. But basically, just the point is that we're at this level of support. Let me make this a little smaller, right? And it's basically the top of the range that we were in for October, right? We poked above. We showed this illustration yesterday. We'll just bring it out again today. But if we look at this as the October range, this as the November range so far, look below and fail. So we pop back up, look below and fail. Actually, we didn't look below and fail. We dropped back into the range, but we did fail and pop back up. Got back into the range. Is this another look below and fail? The main thing is we got the 100% fib extension of the bull flag from April. We've got the 50% level of last month. We got the 50% level of last week. We're around the 50% level of last year, this white dash line. So are we going to find support here, right? We're not looking for an exact bounce off of any of these levels. It's kind of crazy, right? You can have things play out that do, wick off one of your levels to the cent, every once in a while, but we're not looking for that exact, bounce point, right? We're just looking for a bounce at a specific level of support. If we go out to the day, we can see if we end up going 2 up tomorrow, that's a higher low on the day chart, right? And we start to turn around what was this daily downtrend back into an uptrend, right? If we zoom out a little bit further to the week, let's get a little cleaner chart here. We can see that we have an opportunity to make this a higher low on the week chart, right? So if we get the 2 up tomorrow, if we just push up through the end of the week and we go 2 up, we end up going 2 up by the end of the week. That locks it last week's candle in as a higher low, and we continue to trend to the upside on the week, right? So we're at a level that could be a nice level of support. And we basically, with those December calls, kind of just dipped our toes in the water, right? We didn't go all in a full position, right? We start out with a few contracts first at the money so that we can capitalize on, the major part of the movement, right? With the best delta that we can. And because it's in the midst of a downtrend, the prices are a little bit cheaper right now. But if we do get that bounce, right, and then we continue to push up, maybe we add at the higher high, locking this in as the higher low on the day. We get another pullback and a higher low, we may add to that as well. Just continue to follow it up. The point is today, we're just dipping our toe back into the December waters, looking to see if we can get a little bit of action. If we push up, great. If we start to push back down, that's fine as well. We take a small loss, and we continue to play the downside with puts, selling calls, and just follow it down till we get another place that is a good point to bounce from, right? That could be the October low, which also happens to be the high of last quarter and the 61.8 fib of the bull flag from April. So we've still got a lot of bounce places, points that we can bounce from. But if we are going to bounce here, we wanted to go ahead and make sure that we were in to begin with, right? So no big deal there. We've looked at the day through the week, so we've already started to zoom out. Let's go ahead and zoom out to the month here and get the wide view. Make this a little bit bigger for those on phone. And we can see, again, we're still inside on the month. We're right at that 50% level, as we showed on the previous chart, that green dash line that we had. Let me actually bring that up here. Right, so we can see that we've got last week's 50% level out there, or last month's 50% level out there. Do I have a better chart? There we go, yeah, right here. So we're right at that 50% level. If we can get back into that upper half, upper third, maybe even go 2 up, but at least get back into the higher part of the upper half, maybe even that upper quarter, upper third, that would feel a lot more bullish. But again, we're still not breaking down at all. Even if we were to go 2 down on the month, we've got plenty of room to make a higher low. So from the month perspective, still looking pretty good. Again, more red candle than we would like to see, but we're very early days of the month, only second weekend, 2 days into the second week. So we've got plenty of time left in the month to, turn that into maybe a green hammer or whatever. But, from a bull's perspective, there's nothing breaking down, right? If we go to the quarter, we can see, again, we're still in this one combo 2 down, combo 2 up, right? So looking to stay above that 36.15 level right here, which is the trigger. And as long as we're above that 36.15 level, we are targeting the 70.08 as the magnitude, right? Because it's the high of the candle to the left of the one. If you're familiar with the strat, right? We get the one, combo 2 down, combo 2 up, the candle to the left of the one. That high is up here at 70.08. So that is the magnitude for the move. So again, we talked about how it doesn't have to happen this quarter. It could happen first quarter of 26, maybe even second quarter of 26. There's no time limit on it. All that we know is that we've triggered and we know where our magnitude is, right? Now, if we look at the year, again, we started off, not so hot at all, right? We had the 1, 2 up, 2 down, but we were able to turn things around. We made a higher low so far. Made a decent green hammer right now, try and get rid of a little bit more of this wick here and close towards the top of the year. That way we have our best chance of going from a 2 down this year to a 2 up next year, which would trigger a 2 down, 2 up reversal, targeting the high of the candle to the left of the 2 down, which again is that 70.08 level. Then again, after 70.08, we've got the 74 level, which is the all-time high, and past that, we're just looking at blue sky territories at that point, right? So we just need to continue to watch things. We're going to see things break down on the week, month, and quarter before the year starts to turn red, right? Out of all of the flip levels, right? The month flips red up here, the quarter flips red here, the year doesn't flip red till here. So we'll have plenty of warning if the year is going to end out on a bad note, and we'll be able to have our triggers and targets ready for that. But as of right now, just looking to finish the year strong, right? Now, let's zoom back in and look at our 4-hour markers and the triggers and targets for tomorrow. Let's make this chart a little bit better there here. There we go. And if we bring into view our 4-hour markers, we've got, we haven't moved the overnight low and overnight high yet, just because we don't know what they'll be till tomorrow, right? But for purposes of this demonstration, we'll just say, there we go. Now we've got things in line, right? So we've got, as far as the 4-hour markers are concerned, we've got previous high day up at the top of the chart. We've got overnight high here, we've got overnight low here, and previous low day at the bottom of the chart, right? Honorable mention level, of course, is the 50% of last week and the 50% of last month. All right, so let's say overnight we get this type of price action where we've got a decent range. And instead of, like, today we opened up, Tuesday, we opened up at the 50% of last week. So let's say we open up basically at the 50% of last month, right? At that point, we're just, repeatable, proven strategy, looking for higher lows at or above opening print to get into calls, lower highs at or below opening print to get into puts. So if we open here and we push down, maybe we get a bounce off of overnight low, and we push back up, but then we reject at or underneath the opening print level, then we want to look to get into puts, and we're targeting overnight low first, and then previous low a day second, right? It's just an easy, proven, repeatable strategy that you can use to scalp in the morning before we get a real gauge on where price will take us throughout the day, right? On the other side of the coin, instead of puts, if we open here and we push up, maybe reject off of overnight high and we push back down, but we get a higher low at or above opening print, we want to get into calls, first targeting overnight high and then previous high a day. And we want to remember on the way up, we've got a couple of levels that were support now acting as possible resistance. We've got the 100% or the top of the range from October up here at 43.37. We've got last week's 50% level at 43.62, and we've got the 100% fib extension of the bull flag from the April 7th low. So we got to definitely fight through those levels. Those are all levels where we could see some rejection or sideways action on the way up to previous high a day, but previous high a day is the ultimate target, right? Now, if we move past scalping and look for more of a full day trade or possibly even overnight swing, look at the 4-hour chart here. Let's remove those boxes. All right, and we can see on the 4 hour, we tried to get, that's a little better, we tried to get a 1, 2 down, 2 up, but obviously couldn't go 2 up, stayed inside on the second 4 hour candle of Tuesday. So we're still in the position of possibly getting a 1, 2 down combo 2 up, pushing us back above this daily downtrend line, back above this week flip here, flipping the week back green. And the magnitude of that move is the high of the 2 to the left of the 1 here. So just barely getting us back above it. But that is one possibility for tomorrow. Again, we've got to watch out for last week's 50%, this daily downtrend line, which we don't really put a lot of weight into downtrend lines, but you have to take notice of them. You can see we rejected here on Monday, so it could be another possible rejection point. Now, if we go to the downside, we've got a pretty open downside. We will go 2, 1, 2 down, and actually trigger a 2 up combo 2 down. Right, and that magnitude would take us basically back down to the 78.6 fib of the bull flag from the April lows. Right, if we do go past that, we've got last week's low here that could act as support as well. The market maker's expected move low is just below that, so you can see how these are all developing as areas of support, and just below the market maker's expected low is last quarter's high. So I wouldn't expect us to go too much further than that tomorrow. If we do drop tomorrow, and even to drop that far, we'd have to have some type of catalyst, negative catalyst, to push us down to those levels. All right. If you're not familiar with the market maker's expected move low, make sure you check out our weekend video where we dive a little bit deeper into how we get that this range and putting it on the chart and whatnot. Now, if we want to look for, again, more of a full day trade perspective, definitely a more overnight swing, maybe a couple night swing. We're looking at the day chart here, and we've got a decent setup to put in a possible higher low, right? If we can push up overnight and then get some positive action in the morning after price opens, we could go 2 up on the day, right? 2 down, 2 up. Magnitude would be obviously the high of the 2 to the left of the 2 down, but that would get us back above last week's 50% level, and again back above this downtrend line, flip the week green possibly, and then continue to try and press towards last year's high, which has been acting as a level of resistance in the past as well. So we're set up to possibly bounce here, but we've got a lot of stuff we got to fight through to the upside as well, so just keep that in mind. Now, if we go back to the downside, there's a lot of thin structure here. I could see us definitely getting back to last week's low if we trigger 2 down on the day. That would make a lower high, lower low on the 1 hour, re-triggering a downtrend line, right? If we just zoom back into the 1 hour, we can see that on Monday we had the high, higher low, but then a lower high, lower low, lower high. And if we go any lower than this, then we've got a lower low, and we're just continuing this hour downtrend. So be some pretty good fuel to the fire for the bears. It would also take away the possibility of the 1, 2 down combo 2 up on the 4 hour, right? If we push the downside. So if we do get that downside action, don't be surprised if we push down pretty quickly, right? Let's go back to our notes here and just look at the hard numbers from a short-term trading perspective. So this is for Wednesday, November 12th. On Wednesday, there will be 33 trading days left in 2025. The close price on Tuesday, November 11th, was 41.81. And then we know what we've got for our flip levels here. We've got to get to 45.06 to flip the week green. We've got to get to 49.49 to flip the month green. Now the quarter and the year are red, and we're quite a ways. We're a decent distance away from flipping those red, but we do want to keep in mind what those levels are. Again, the market maker's expected move for the week was plus or minus $5.66, giving us a range of 47.40 to 36.08. And then we closed that double gap below us today, so we're back to the old gap levels that we have, nothing new, but we still want to keep those in mind. Again, from the scalping perspective on that 5-minute chart, we want to look for higher lows at or above opening print to get into calls, and we want to look for lower highs at or below opening print to get into puts, right? Now, from more of a day trade perspective, on the 4-hour chart, if we get action to the downside, that gives us a 2-1-2 down reversal, and that triggers at 41.73 with the magnitude of 41.65. So not a lot of magnitude there, but we've got our extended target of 40.75, which I believe, if I'm not mistaken, that's the 78.6 fib of the bull flag from the April low. Now, if we go to the upside, that triggers a 2-1-2 up, and if we reach the magnitude of that, that triggers a 1-2 down combo 2 up. So the 2-1-2 up triggers at 43.17 with the magnitude of 44.04, and if we trigger that 1 combo 2 down combo 2 up, we've got an extended target of 45.06. Now on the day chart, if we go to the downside, we've got that 2 up combo 2 down triggering at 41.65. The magnitude of the move is all the way down to 37.04, and since that's a pretty decent move, we've got some intermediate targets on the way down just in case we're just going to make that higher low on the 4-hour perspective. That would keep us from going too far down on the day, right? So if we go to the upside, then we would have the 2 down 2 up triggering at 44.04 with a magnitude of 45.52. But because we've got those levels I talked about before to kind of fight through, that we've got an intermediate target at 45.06. But again, if we do reach magnitude and we're having a momentum day where we're actually getting some movement, not just going sideways, and we reach that 45.52, we've got an extended target of 46.79. All right. I won't go back to the charts for the week, month, quarter, and year. We're just reviewing them. Not too much has changed. We're inside on the week. If we are going to go 2 up, 2 down on the week, or 2 up combo 2 down on the week, that triggers at 37.04 with the magnitude of 35.97. And if we reach that magnitude and continue to go lower, it triggers a sequence of 2 up, 2 down, 2 up combo 2 downs on the week chart with extended targets of 34.17, 33.18, and 31.28. Now, if we go to the upside and trigger that 2 up, that locks last weekend as a higher low, and we get the 2 down, 2 up reversal triggering at 51.19. 50.19. Not a lot of magnitude with the strat reversal ending at 51.91 there. So we did put some extended targets out at 53.15, 54.42, 55.46, and 56.92, which all line up with either higher highs or the fib extensions from the April low. Now on the month, again, we're still inside on the month as well. So if we are going to trigger to the downside, it's 33.98. Quite a ways to go still, so I don't think we're going to trigger that tomorrow. Maybe if we get a big push down tomorrow, we look at this more seriously on Thursday, but for right now, don't see us triggering to the downside. We're a lot closer to triggering that upside, but at the same time, we're still quite a ways away. So don't think we're going to go 2 up or 2 down on the month this week. I think that will probably come in next week or the final week of the month, but we do need to have our triggers and targets ready. So if we do reach that 50.76 level, we've got our extended targets here for the 2 up, 2 up. And then on the quarter, we have triggered the 2 up, 2 up, which was part of this 2 down combo 2 up, triggered back at 35.49, and the magnitude was 36.15, which then triggered the 1 combo 2 down, combo 2 up. We've reached a couple of the targets on the way to that magnitude of 70.08, but because that magnitude is so large, we've got our other extended targets here on the way up to that magnitude. All right. And again, on the year, we did trigger the 1 2 up, 2 down earlier on in the year. Again, like we said, we were able to, at this point, make a higher low, make a nice green hammer, and set us up for a possible 2 down, 2 up reversal next year in 2026, with that magnitude of that move being that 70.08 again. All right. So there you have it, the triggers and targets for everything all the way from, scalping perspective up to the 1 year chart. I hope it has been good information for everyone. We just try and shove in as much information as we can without taking up too much of your time. So again, if you did enjoy this video, make sure you hit that thumbs up button. It goes a long way to help the channel. It's a free channel. We're not trying to sell anything, so we think that a free thumbs up would it's not too much to ask for, right? But it just shows, it helps us gauge, how we're helping people, right? Those and the comments that we get in the comment section, right? We like interacting with people in the comment section as well. So It's helped us with our presentation of these videos. We've been asked to focus on a couple of things by certain people, and we've been able to work that into the video. And, so if there's anything else that people want more information about, or if, even if you're seeing something else in the market that we're not seeing, hit us up in the comments. Let us know. We'd love to chat. So that's it for today. Like we always say at the end of every video, if you're watching this on Tuesday night, hope you get some good rest tonight. Wake up refreshed tomorrow. If you're watching this Wednesday morning, we hope you got some good rest last night and woke up refreshed this morning. And we look forward to getting out there and trading with you.